On today's episode, we are going to take a look at one of the best Chinese stocks out right now. This company has returned about 70% year to date to investors. So congratulations to all investors right now. And right now, they just reported earnings and they're up 8% after reporting earnings. That company is J DStock, ticker JD for those that are not familiar. And today's episode is going to be broken down to the following. First, we're going to start off and just do a quick overview of just their earnings results. Then after that, we're going to take a look at their past and future expectation growth for the company. After that, we're going to take a quick look at their earnings, take a look at some highlights that might have happened, and take a look at their financial documents. And at the end of the episode, I'm just going to give my thoughts on the company. And like always, if you are new to my channel, if you are a long-term investor, if you like to learn about growth stocks, make sure to hit that subscribe button. And to my returning viewers, thank you so much for the support. Like always, it means a lot and I'm completely grateful. If anybody ever wants to get in contact with me, all my places are free, from YouTube comments, my Twitter, my Discord channel, my weekly newsletter, live streaming on Twitch. Feel free to follow me to get all that other content. But remember, I am by no means a professional, so none of this should be taken as advice. This is just my opinion. Make sure to talk to a financial advisor before making any decisions. Alright, so first let's take a look at the price performance for this company. Right now it's sitting at $66.98, a little bit, I'm closer to 67, and we can see at the beginning of this year, this company was sitting at $37. So year to date, this company has returned 77% to investors, a company with a market cap of $105 billion. Many people might know JD as a Chinese e-commerce company. Right now, even though they are a Chinese company, they are traded in the NASDAQ, like I mentioned, in ticker JD. And actually, before I continue, a huge shout out to all the members that are joining me in the YouTube membership that are supporting the channel. Like I said, all my information is free, but if you want to support the channel, feel free to do so. There are different tiers. And thank you to those that have signed up. It truly means a lot to me. All right, so let's take a look at their earnings results. First, they did report today, early this morning, August 17th, 2020. Quarter two non-GAAP earnings per share were 50 cents, which beat by 12 cents. GAAP earnings per share were $1.48, which beat by $1.23. Then we have revenue. Revenue for this quarter was $28.5 billion, and that's up 30% year over year. And we can see this is a huge move for all these e-commerce companies that are continuing to show strong results. I'm pretty sure this is why similar companies like C are up big today. Let's take a look at C stock real quick. C right now was up 6% for the day, and they report earnings tomorrow. And I'll make sure to tune in for that, guys. I'll do a video on them. But I'm pretty sure it has to do with these amazing results coming in from JD. They beat earnings per share expectations. They're positive earnings per share, so they are already profitable, and they're coming in with revenue of over 30% year-to-year growth. Their annual active customers increased by 30% year over year to 417 million users in the trailing 12 months ended June 30th. All right, so now we're seeing this crazy growth for this company. Let's take a look at past growth for JD, and I want to see how long have they been profitable. And here I'm on Lazy FA. The first thing I want to see is this company's prior growth. In 2019, at the end of their fiscal year of 2019, this company grew 23% year over year. In the end of 2018, it grew 22%, and in 2017, it grew 47%. So we can see in the past 3 years, JD has been a strong grower. And right now, this quarter's growth was huge. It was a 30% year-to-year growth when we're taking a look at quarter. So it's above average what we've seen in the previous 2 years. So we're seeing this true strength in e-commerce. Next, I want to take a look at their margins. And this right now, you can see JD is the true definition of a growth stock. These are the companies I tend to invest in. Unfortunately, JD is not one I'm in. And some of the people in the Discord channel are probably going to give me a lot of nonsense for that, because JD is a perfect example of a growth company for me, right? We can see year over year, their gross margins continue to increase. And with growth companies, normally this is what you're going to find. You're going to find a company that's not profitable for some time. But year after year, their profit margins continue to increase, where 2019 was the first year, their first fiscal year, that they became profitable. And look at them now, quarter two of this year, fiscal year of 2020, and they continue to be positive. So this is the true definition of a growth stock. Now let's take a look at their future growth. Let's see, how much is this company expected to grow in the upcoming years? First, let's take a look at this forecasted annual revenue growth. This company is expected to grow its revenue 15% on average on an annual basis for the next 3 years, right? This doesn't mean they're going to go 15% every year. Maybe this upcoming year they'll grow 45%, maybe the next year they'll grow 10%, and the year after that 5%. So on average, I don't know if that math added up right, but on average for the next 3 years is going to grow 15% annually. Unfortunately, that's lower than the industry, but that's faster than the market. And the only reason I think that's lower than the industry is right now the industry is being filled with a lot of newcomers in different countries like Mercado Libre. So those are growing at a huge levels. So it's pushing the industry growth higher, but 15% is still a pretty strong growth. Normally, I tend to look for companies growing over 20%, but again, 15% is still pretty impressive. They're also expected to grow their earnings at really crazy levels, 42.3% annually on average for the next 3 years. And we can see this company is profitable and are going to be profitable for the upcoming years, and that's what analysts expect them to be. One thing is, JD is mainly an e-commerce company. We're going to take a look a bit in some of the other departments they're in. E-commerce, any type of retail store, tends to have very low margins, and that's what we tend to see here, right? Even though their revenues are increasing like crazy, their earnings are not going up that much. And that's what you tend to see in like I said, in the retail space, you normally have very low margins. All right, so next, what do we want to take a look at? Next, let's take a look at some of the important things that happened to them during this earnings. Like I said, this company did over $28 billion of revenue. $9 billion of that came from general merchandise sales, and that was up 45% compared to the same time last year. Service revenue rose 36% to $3.2 billion. So we can see a lot of their revenue segments are up strong double digits. We already talked about their annual active customers increased 30%, but their mobile daily active users were up 40% year over year in June. So we can see it's growth all over. They're seeing growth in customers, they're seeing growth in sales, they're seeing growth in their service products. All right, so next I pulled up their press sheet that they released this earnings. And again, we're not going to read through all of this, right? That's insane right now. I know you guys have other things to do. I just want to talk about some of the major high points. On June 18th of 2020, which was this quarter, about 2 months ago, JD was listed in Hong Kong. So with this Hong Kong money, they raised about $34 million in Hong Kong currency. I'm not sure what the actual currency is called, but just want to mention that there are more shares out there. That thanks to this, JD plans to use the net proceeds to invest in key supply chain-based technologies, initiatives to further enhance their customer experience and improve operating efficiencies. And I'm going to show you guys some of the things that JD is doing that I think is pretty cool. So here on their earnings, on their express sheet, they talk some highlights in their JD retail. The first thing, in the second quarter, which is this quarter now, their live streaming continued to grow in popularity as a tool for suppliers and merchants to engage with customers. And this is something that I haven't seen many different e-commerce do. They've actually set up a live streaming platform within JD to allow sellers to sell their products. And that to me is pretty impressive. They are seeing great things. For example, this person, Dong Mingsu, excuse my pronunciations, booked a record-breaking sale during a 3-hour live stream show. So they're kind of making what I feel like this is more like an independent QVC show, which I think is pretty cool. It's an innovative market that I didn't think about, and it's actually pretty impressive. In April, JD Retail launched instant delivery services for mobile products with delivery of mobile phones as fast as 1 hour through JD Dojia. And again, right, that's pretty impressive. Mobile products are items that I feel people are willing to go to stores to purchase it because they don't want to wait 2 days without a phone, or they don't want to wait 2 days for their phone case. These are things that people would rather go to stores to purchase. But now with this instant delivery, it helps up with that. JD Retail continues to apply advanced technologies to various consumption scenarios, online purchasing following the launch of its AR-based virtual shoe try-on services. So that's pretty cool, right? You can use their applications to put on shoes that you want to buy. And that is the first for the e-commerce platforms in China. Very innovative. And this is one thing I'm really liking about JD. They seem to be a very innovative company. Unfortunately, even though, like I mentioned, there are some members in the Discord channel that are going to give me so much nonsense, especially Bill Brin. Bill Brin, if you're listening, my bad. This is completely a great stock, and it sucks that I'm not in it. But at the same time, remember guys, there's so many winners in the stock market that you don't have to be in every single winner to have an amazing portfolio. And here, they continue with this innovation in JD Logistics. Near Beijing, JD has equipped the first automated storage and retrieval system for bulky items in e-commerce industry. It's greatly improved efficiencies for handling items like air conditioners, refrigerators, and furniture. So JD is seen like a company that's in the future already, and to me this is pretty impressive. They are trying to do this in future warehouses, and like I said, I just wanted to show you guys the type of innovation this company has. Next, let's take a look at their balance sheet, and let's just take a quick look at if there's any changes. Right now, what I want to see is, one, I saw this company is not a fast growth, it's a fast growth company and a company with very low profit margins. So I want to make sure that this company has plenty of cash and cash equivalents available to them to pay off its debt. Another thing, remember, this company just went through a listing in Hong Kong, so they just accumulated more cash. So we're gonna see that in this upcoming quarter. So here, this values are in RMB, Chinese currency. I'm pretty sure that's renminbi. Again, excuse the pronunciation. But we can see in about 6 months ago, they had, if we add their cash and their short-term investments, they had about 60, let's say $60 billion in their currency. Right now, that's, if we relate that 60 billion, it's now corresponding to 110, would it be 100, more like 120 billion. So a huge increase in quick cash, but again, probably most of it coming from that listing that they did. Total current assets increased by about 60 billion, which is coming from that main changes in cash and cash equivalents. Again, they did see total assets increase, again, mainly coming from that quick cash that they saw up there. The next thing I want to see is just their short-term and long-term debt to make sure there's nothing crazy going on there. And one thing I want to see, I see is their total debt has increased by about 40 billion, but their total assets increased by almost 100 billion. So that's good to see. Even though their total liabilities are increasing, their total assets are increasing at a faster rate, right? Taking on debt is not a bad thing if you have the assets to back it out. If we take a quick look at their total debt, which is their short-term debt, unsecured senior notes, and long-term borrowing, they have about 13 billion, about 21 billion. I'm adding this short-term debt of about 8 billion, unsecured debt, unsecured notes of 10 billion, and long-term borrowings of about 3 billion, so close to 22 billion dollars of debt. This company has enough cash to pay this off. So JD has a very strong balance sheet. And now let me just take a quick look at their valuation number here in Seeking Alpha. I just want to take a look at their future forward PE ratio. For December 2021, JD has a forward PE ratio of 33.46. To me, this is an okay valuation. I wouldn't consider it cheap right now. But one thing we are seeing, JD has a strong balance sheet, very strong balance sheet. They also have, they're also seeing some decent growth of 15% annual on average annual growth for the upcoming years. They're already profitable. They are very innovative. And a 33, like I said, 33.46 is probably one of the cheapest forward PE for any e-commerce company that I can think of right now that is growing at this level. But at the same time, it's not, I wouldn't consider it cheap at the moment. So JD, even though with this great earnings, this great returns, it's a forward PE ratio that's probably pretty cheap. I'm not sure if I'm willing to enter right now, and it's not for any bearish reason, right? When I enter a company, the valuation is obviously important, but I don't enter a position with a full 10% right off the bat, right? I dollar cost average a weekly basis because unfortunately I don't have unlimited funds. So every week I would put money and add on to my position. At the moment, I just feel a little more comfortable adding onto other positions than starting a new position in JD. So JD, it's pretty good, amazing earnings, but for me, I'm not gonna purchase. I don't think I'm gonna purchase right now, but that could change any moment. They did have great returns. They are very innovative. So I hope you guys enjoyed today's episode. Like always, thank you for the support. Thank you so much for watching this video. Take care, guys, and have a good night.